Warning signs a crash is coming. Well, let me tell you that markets don't just crash out of the blue. They do give out warning signs, but people tend to not see them because they're a little bit hidden or they don't know what the warning signs are. So I'm going to show you a couple of warning signs that the stock market will give out, even in great times, that it could be most likely about to crash. So what are the warning signs? Let's start off with some of the biggest warning signs out there. And one of them is known as the Hindenburg Omen. Now, the Hindenburg Omen usually happens when a market is doing very well. And the Hindenburg Omen is triggered when you have more 52-week lows than 52-week highs while the market is rising. And this Hindenburg Omen has been able to predict market crashes really almost in like 9 out of 10 instances. And you can all you have to do really to detect a Hindenburg Omen is look at the 52-week highs and the 52-week lows. And if there are a lot more 52-week lows than there are 52-week highs as the market is rising, that means that there is weakness in the market, but it's being camouflaged by a rising market. And it's usually being camouflaged because the market is being carried upward by less and less amount of stocks. And so the internals are getting weak. It's almost like the load-bearing beams of a structure are about to crumble, but you can't see the load-bearing structures because they're inside the wall. So Hindenburg Omen is really a great first indicator that a market is about to roll over. Now, the second indicator, which kind of comes a little later after Hindenburg Omen, is when the market leaders begin to roll over. Now, we want to know what the market leaders are in a bull market. You want to look at what are the best performing stocks since the bull market started. And for the bull market that started in 2009, it's really the FANG stocks. If you don't know, those are the 4 leading tech stocks: Facebook, Amazon, Netflix, Google. When the FANG stocks begin to roll over, and they have really begun to roll over in 2018, that is a huge sign that the market is about to crumble, because those leading stocks in any bull market, they are overweighting the index. Literally, like Apple is 22%, or probably like 20% of the S&P 500. So if Apple rolls over, the index rolls over, and then it takes the rest of the market down with it. So looking at the leading stocks of a bull market, if they begin to roll over, it's almost like if you have a boat that just begins to capsize at a certain point. If it just hits a certain point, that boat just completely rolls over. So leading companies in a bull market rolling over is the second big indicator that a market is about to crash. Another big indicator of market about to crash are failed IPOs. This is usually when a market is great, you have an IPO of, let's say, an internet stock comes out and then it rises 100%, and then it keeps going and going. A great indicator is when IPOs begin to fail, when 60 days after a stock comes into market and being sold, that let's say 60 or 90 days later, that stock is now being sold less than when it was initially offered the first day it comes on the market. So failed IPOs is another indicator that a market is about to fail, because people are just losing confidence at that point. And the last sign that a market is about to crash is an inverted yield curve. Now, if you look at a yield curve, if you buy treasuries that are 3 months, 6 months out, you don't get paid a huge interest rate. Like right now, you get paid nothing. But if you buy treasuries that are 10-year and 20-year, you'll actually get 3%, 4% right now, which really isn't a lot. But what will happen is when a market begins to roll over is that more and more people say, I don't want my money in the stock market. I want to go to a safe haven. I want to go to treasuries. So they begin buying treasuries like crazy, and the yield goes up. And at a certain point, front-end yields like the 3-month yield will actually begin to yield higher than a 6-month yield or a one-year treasury. So when you see an inverted yield curve, that pretty much means that you're literally months away from a market crash or a bear market. So if you begin to hear the term inverted yield curve on CNBC, I would actually put a Google alert for inverted yield curve. If you begin hearing about that, people buying, flowing into treasuries and to bonds, and the interest rates on short-term treasuries are beginning to go higher than the treasuries that are a little longer in maturity, that is a flashing red sign that the market is about to roll over and crash. So I hope you enjoyed this video. If you did, please be sure to like, share, and subscribe. Thanks a lot. Bye.